Mine damer og herrer, som jeg er i gang med at sige, velkommen til den her måneds live webinar her i Reallifetrading Danmark. Sidste måned, der hørte vi fra Tony, som jo talte om credit spreads og om S-curves, og jeg ved, at der er rigtig mange, der har fået rigtig meget ud af det her S-curves i særdeleshed, for det var lidt noget, der åbnede øjnene for os alle sammen. Og credit spread folk fik også nogle gode hints, så jeg kunne høre lige mange af jer, der var før de hørte Mette og Jakob lige hurtigt diskutere Mettes første credit spread i dag. Og det er jo en af de her ting, som vi har gjort lidt i her over vinteren. Denne gang har jeg valgt at invitere Miloni. Miloni, hun er også kendt som Mama Bear i Reallifetrading USA, fordi at hun er virkelig god til bear trading. Det er der, hvor hun laver sine penge. Jeg mødte Miloni første gang for 2 år siden til et retreat herovre i USA, hvor jeg er i øjeblikket, hvor hun stille og roligt sad over i hjørnet og bare hamrede bearhandlen ud. Udover at være god til bear trading, så er Miloni også super god til Fibonachi, og det er lidt det, jeg har bedt hende om at tale om i dag, for det er en ting, som vores kurser ikke dækker endnu. Og det er et super værktøj til at på baggrund af historik og matematik og prøve at give et præg om, hvor vil aktien bevæge sig henad, og hvor vil den sandsynligvis vende næste gang den vender. Og det giver også jo et kæmpe præg om, hvor skal jeg sætte min entry, hvor skal jeg sætte min stop loss osv. Uden further ado, vil jeg ændre over til engelsk. Og som sagt før, alt det her, det bliver optaget og bliver lagt ud på YouTube og delt i Slack for dem af der er medlemmer, og så kan I altid tilgå dem der. So Miloni, are you back from the water hose?
Yes, I am.
Awesome. I just praised you like crazy, and told you that your middle name is Mama Bear. And that we look very much forward to hearing what you have to say about Fibonacci's and trading the bear market. So yeah. I will let you share the screen and let you kick it off.
Absolutely. Okay. Well, first of all, what a perfect day. You picked like the most perfect day, right? I mean, really, we couldn't have asked for a better day to be talking about bear trades. And I mean, honestly, I was so excited in the morning. I traded Tesla snapback bearish on the funded account challenge and did pretty well. I'm trading SPY bullish currently. I don't know. Can you guys see my screen okay? Type in 1 in the chat pane if you guys see my screen okay. I see a couple of ones. Okay, cool. All right. For anyone here that may think I am talking too fast or has a hard time understanding me, sometimes I get too excited and I'm like, oh my God, let's do this. Just feel free to stop me and be like, could you go over that again? And I will gladly do it. So I am looking to take this trade bullish right now on SPY, on ES essentially. This is the futures, and I mainly, guys, trade futures. 80% of my income comes from futures trading. And then the rest comes from Tesla here and there. And it's because I have a very small account. I like to keep it that way. And so if my account gets to a larger size, I will withdraw the money and put it in other assets, such as land or other businesses, whatever. But as soon as these cross over, I am going to look to trade this in the bullish direction. And the thought process behind it and why I want to trade bullish is because of this. So we filled this gap on SPY. This is the, let's go to the 65-minute chart. And for those of you that were able to go watch my futures videos that I did for the futures room and the RLT USA side, I explained how I trade gaps and how I trade fibs and in relationship to, you know, just the general market. So I knew today when we were failing this inverse head and shoulders, I mean, you can see this inverse head and shoulders on the SPY. And yesterday we were trying to kind of go higher. And today we opened with this nasty gap down. That is disgusting. That does not look good for the inverse head and shoulders scenario. Apologies for the terrible drawing skills here. Somebody asked me how I see it as a failed scenario. And so I had to draw it out for them and send it to them. But so I knew that we were going to go fill this gap. And so I shorted the futures, not really all the way down here. I wish I did. I'm not very proud of where I got out, but I did get out somewhere over here on the futures. But that was a pretty, cool trade that I took in the morning. And so now that we fill this gap, I'm looking for some type of a bounce or some type of a reversal. And so I'm really just hoping for these moving averages to cross over, some more volume to come in. And then what I like to do is put fibs on the daily candles. So for today, on the futures, and you can do this on any chart, really. We can go back and look at Tesla. We can go back and look at SPY, ES, whatever you want. But if you can follow along, so I will adjust my fibs to the high and the low of today, assuming that the high and low has come in. I'm sure the high definitely has come in. I don't know about the low. We could go a little bit lower. I don't know. But assuming the high and the lows come in, I'm going to go to the 1 minute chart. Lately, guys, so I like to look at the 3 minute and 5 minute and primarily the 15 minute chart. I used to trade very heavily on the 15 minute chart. But lately, the moves have been so quick where if you're not quick enough, then you can move, you'll miss the move. I mean, on the 15-minute chart, by the time you press the buttons or by the time you look at the setup, you're already too late. So I like to trade the 1 minute chart. Lately, I've come up with this cool strategy that I will go through with you guys. That I also talked about on the futures room, which I have recordings of, by the way, guys. So if you guys are not a part of this Slack channel, or if you guys can't attend the futures room when I'm talking due to time difference or whatever, feel free to ask me for the recordings. I will record every session and I'll send it out to Peter or whoever. Just DM me. I'm also in the Denmark Slack channel, so I'll just post it there too, just so we can get access to it.
Please do. Yeah, definitely. I think most of the Danish traders have not got access to the all access path that the US has. And we are on different subscriptions. So if you could share that in our general channel, you're welcome to do so.
Okay, so the first video where we talked about strategies, about this specific strategy, was posted on RLT's YouTube channel, but I don't think you guys will have access to it, so I'll just go over it. And then the second and the third video, I'm on the mic on Tuesday and Wednesday in the afternoon. So anyway, let's go over it. So these are the green line is the 10 SMA, and the red line is the 20 SMA. And this is just like Momo trading. So when the 10 crosses over the 20, so when the smaller moving average crosses over the larger one, you go short. So in this scenario, I know it looks scary, but you would have gone short somewhere over here. And I mean, really, that's a pretty good profitable trade. Right now, you would have gone long on this candle, and really, you would have made money on this. I mean, you'd be profitable right now. And your stop could go somewhere over here below the previous pivot or below the 20 SMA right over here, whichever way you prefer. The reason why these bull trades are not working, guys, right now is because, let's go over this. We have so many moving averages along the way. So we have the 10 EMA on the 3 minute chart. We have the 10 EMA on the 5 minute chart that currently is acting as resistance, and we're battling it. But all of these hammers I like a lot. So I'm pretty confident to go bullish at the gap fill area and see if some reversal can come in. And then where fibs play out is So this is how I'm going to play out. So if I choose to get into this trade, I'm not in it right now because I'm with you guys and I want to stay loyal to you guys. But if I was taking this trade, I would stick to this trade for as long as I can or until the 236 level all the way up here. So if I'm going to be in this trade, I'm going to put a target at 39.67 and walk away. Really, walk away. One of the best things that I found recently is, so I tend to overtrade a lot, especially during bear days, because I mean, okay, I want you to really search your soul and be true to yourself and answer this question. I want you to type in a 1 if you've gone from an extremely profitable day to a losing day because you've overtraded, or at least one of those days. You've at least had one of those days ever in your trading career. Okay, I see a couple of 1s. Okay, cool, awesome. I like that a lot. Okay, now I clearly have. And the reason why is because my office is situated pretty far away from where the children are. I've gotten comfortable in it. I have a snack cabinet and I don't ever have to go upstairs and check on the kids because their nanny takes care of them. So I've gotten pretty comfortable. I never have to walk away. I never, ever. So the problem is I like my office a little too much. I don't find a reason to leave. I have made it a home, my humble abode. And I never walk away. So I'm in front of the screen all the times and I'm looking for these setups all the times. And that's why I overtrade a lot. So I want you to really, guys, make it as uncomfortable as you want, as you can. Make it as cold as you can or as hot as you can, where you have to walk away for a couple of minutes every single day. You cannot be tied to your computer all day during all trading hours. It can really hurt you emotionally also and mentally. I think it just for me, it's overtrading really gets me. So let's go back to the fibs. I just came upon this epiphany recently where I'm like, I never walk away. So I wanted to share that with you guys. Okay, cool. So we've talked about the 10 and the 20. I'm going to turn off the SMAs and I'm going to show you a really cool trade that I did yesterday just based on fibs. So here is I'm going to get rid of these fibs because this was from yesterday and it was on the 15-minute chart. And we're going to go back in time. So we're going to go back to this guy right here. Okay, cool. What we're going to do is put fibs. So this was the low from the overnight trading session to the high of yesterday. Okay, and we're just going to pretend like this is happening in current times. All right, awesome. Let's move on. Okay, so we have a ginormous sell-off at open, okay? We're bouncing off of the 618 level. And anytime, I want you to put this rule down, guys. Anytime we bounce off of the 618 level, in general, we will go tag the 236 level. From there, what we do is entirely different. I don't know. But if you went bullish at the 618 level, you will more than likely get to achieve this target, okay? But we've had a couple of bull candles in a row. So I'm thinking, really, my idea is really we're going to go to the 236 level and then come back down for another retracement. That's it. So that was the idea. It was a little bit of a high risk play because we were getting bought up quite quickly. As soon as we got sold off, we got bought up quite quickly. So what I did is went ahead and played a short right over here. So I placed a short at the 236 level. So I placed a bearish limit entry and I put my target at the 382 level. So I'll put my target right over here and my stop went above the previous pivot. Now I put this trade out there in the futures room on the Slack channel. So I kind of mentioned to everybody, I said, this is a high risk play. I don't know if we're going to go get filled and get stopped out immediately, but I'm willing to play this out because the fibs have worked out well in my favor in the past. So I'm going to play this out. Okay, let's see what happened. Okay, so on this candle, I got filled. On this candle, I was scared, and then there we go. That's it. We're out. So now it doesn't matter what it does to me. But how cool would it be if you could guess that this candle is going to fill you? It's going to come back down and retrace this much. Now, then from here, Jerome Powell came and talked, and then we dropped quite a bit again. And then all of that is none of my problem. I made my 1R in this extremely bull scenario, just trading bearish. How cool is that? I mean, how amazing is that? You can bear trade in any bull markets. I've been bear trading just like this. This is my signature move since 2019. And if you guys think you couldn't have traded bearishly in COVID or from 2019 to 2022, you were wrong. You could have traded bearish. Now, there's a couple of other scenarios as well that came with the fibs. It wasn't just fibs blindly. I saw this trend line being in place, right? So with this candle, when it would fill me, I saw this trend line. So I knew there'd be rejection over here. Plus the 236 level happened right over here. Then I went and flipped back. As soon as I got filled over here, I went and flipped back at the 1 minute chart, and the moving averages, the 10 and the 20 had crossed over. So I felt a little bit more confident to stick around with this candle. And I remember posting it in the room. I said, wish me luck, guys. I don't know how I'm going to get through this, but I still stuck around. I didn't get scared. So here we go. That was a pretty easy 1R trade. Simple as that. It's fairly simple. Now, here are some fun factors to remember. Fibs work really, really well for entries, exits, targets, everything. Okay, in general, everything really. So let's go back to ES and let me show you. Let's go to the daily chart on ES. It's still in backplaying mode, yes. Okay. All right. So for those of you that don't understand fibs or that don't know what fibs are, let me simplify it for you. I believe in just simplifying things. There's just no need to complicate things. I mean, really, trading in itself is really, really complicated, and there's no need to act like a professor all the times. So normally, when we have a bullish day like this, for example, we will undoubtedly come back and retrace it. Okay, so we will undoubtedly have some selling. This is a daily chart currently. And what I'm looking for with the help of fibs is where to get in. How much sell-off can I expect? How many people can I expect that bought over here to sell? Or how many shorts can I expect to close out their positions when it gets to a certain level? 618 usually tends to be a pretty good level. Okay, so today in the morning, I had decided we had a pretty bullish day. So today in the morning, I had decided to go long around the 618 level. We had a pretty bullish day yesterday, and this was the opening candle in the morning. And so I said, okay, well, 40.35, I'm going to keep an eye on that level and see if we see some strength come in, see if we see some really good volume come in. If we do, I will take that trade. I will look to go long on that area and expect it to be a day like that day where we go higher then maybe sell off. I don't care, whatever, doesn't matter. But if I got in at the 618 level, I will get out at the 236 level. And that's a pretty cool, you know, bull trade early in the morning, right at open. So generally, that's how I like to play it. But for today, it never happened. We took out the 618 and we took out the 786 pretty confidently. I mean, really, we just didn't even see any buying come in. So then what we want to do is wait for a little bit of a retracement, go back up to the 618 and short it here at this level, since there's no buying coming in. So the way I look at it is, let's say 100 people sold, or 100 people bought on this day, okay? And we're going to pretend like none of these previous days existed. We're just going to talk about this specific day. That's it. 100 people bought on this day. 23 out of those sold. If you were the first one over here that bought and you were pretty profitable and 23 people sold, you wouldn't really be worried because you're still profitable. You'd be like, okay, cool. I'm okay with that. Okay, cool, fine, great. You're still sticking around. You're still being patient. 38 people sold. You're still being patient. You're like, nah, it's going to bounce back. Okay, whatever. 50 people sold. And you're like, okay, well, now I'm a little bit worried, but let's see what happens. 618 tends to be the magic number that makes things bounce, usually. Okay, but if 62 people sold, if you average it down, if 62 people sold, that's going to get me worried a little bit, because now there's not that much profitability for me to be in this trade. I mean, I'm not that profitable. Okay, cool. We're still sticking in. We're still hanging by. 79 people sold. That's a little scary. You're going to get out. You're going to get out and say, okay, whatever little bit profit I have left, I'm going to take it and leave. That's what fibs are, my friend. That's what it really simplifies it to. That's it. So let's say you understand the magic of fibs and you get the idea of how exactly they work. Okay, so let's say you did short at the 618 level. Where should your target be? At the 1618 level. If you ever have the opportunity where it's an extremely bearish day, it's a news driven day. Today is, I mean, if you guys listen to CNBC today, they're bringing in analyst after analyst after analyst saying, yes, we're in a recession. Yes, inflation's high. Yes, this is an issue. Yes, that's an issue, et cetera, et cetera. No one's buying. Everyone's scared. Everyone's freaking out. That's a news-driven day. And so that, to me, tells me we will undoubtedly go to the 1618 level. Or we could refer to SPY on the hourly chart and go back to the gap fill area, which also happens to be in the similar range. So that's how I like to use fibs. They work really well. So let's see if people did try to buy it up previously at the 1618 range. Okay, so I was watching it around on the 1 minute chart, and it did seem like some buying did come in at the 1618 level. So the first time we touched the 1618 level today, here you go. We did try to double bottom, but then we failed it. And so you could have shorted that too, because we failed it. And so then you're like, okay, well, we're going for the throat. We're going for that gap fill area. Cool. Absolutely. Yes, that could work. If you took this bull trade while I was on the mic and we were talking, this also could have worked, guys. So if you took this bull trade based on the SMAs, SMA crossovers, this would have been your entry. This hammer candle would have been your entry, and you could certainly put your target over here if you wanted to. Sure, that could have worked too. Absolutely. Or you can put fibs on today's candle and say, okay, well, I'm going to be a little bit patient and wait for it to go to 67. Either way, it works. At this point, I'm just trying to figure out if there is some sort of buying coming in. and based on the previous day, how I like to look at fibs and how I like to analyze any sort of situation. So I was in a trade on Tesla earlier, and this is where the low was at that time, and this is where the high was at that time, okay, on Tesla for today. And so I saw these tweezer bottoms, and I saw this reversal coming. I didn't take this trade. I can't take credit for it, but I saw these tweezer bottoms, and if you were brave enough and you were like, okay, cool, well, now we will have some reversal because the ES is at that 1618 level, or the SPY is at that 1618 level. We're gonna have some bullish momentum. You could have easily made 786 your target. And I mean, really, you can't make this up. Really, you would have gotten filled over here. And then it doesn't matter what it does from there. I mean, that's a solid 10-point move. Is it? Yeah, that's a solid 10-point move. You wouldn't have been wrong about it. So there we go. That's a pretty easy trade. That's why I didn't switch the fibs out to like the new low. I just wanted to show you guys how cool these could have worked out if you did want to take it. Another fun way that you can use fibs is doing the way I like to use fibs for, if you guys are into, so I primarily day trade. I don't swing trade as much, and you can't blame me for wanting to swing trade in this zone, or not wanting to swing trade in these choppy markets. You have no idea how many people I get every single day telling me that their accounts are getting wiped out, or they're stuck in a swing trade and they're bag holding from God knows when, and it's just not working out. So I don't like to swing trade as much, but if you do want to swing trade, and you do want some realistic targets on things, then let's say you are trying to measure let's say SPY did something like, I'm going to try to annotate on my screen. So let's say SPY did something like this. Tomorrow we just gap up, and it did something like this, where we have a higher low and we're looking to break out. We're going higher, okay? So let's say we're trying to do that. Where would you realistically put your target? You could put your entry over here at the 236 level on a swing trade, because so we're trying to measure out how high this move can go. So based on this drop, we're trying to measure how high this can go. And so based on fibs, if you put your entry at the 236 level, I would look to exit around the 618 level. Or if you want to be a conservative, because we're essentially in a bear market right now and you don't want to be too ambitious about it, then you could put your entry at the 236 level and you could put your exit at the 382 level. That could work as well. I could totally see that play out. Have you guys heard of 420 being a potential level of reversal? Has anybody ever told you 420 could be a potential level of reversal? This is why. 424 around 424 area is where the 50% retracement is off this drop. Sorry, the alerts are going off. So off this bear move, roughly, if 50% people were to get out, 420 roughly is the area that we could look for another reversal. We could entice more bulls, or I mean, entice more bears to come in and short it. So that's how I like to look at fibs and play them out in swing levels as well. Does anybody have any questions before we talk about anything else? Does anybody know why I put the fibs this way and not the other way?
Only please, could you? Yeah, exactly. Please, tell us why you put the fibs where you do, and might, if you got some time, talk about your 15-minute or an hour's swing trades.
Yes, absolutely. Okay, cool. So I put here's a little cheat sheet, guys. So when you're trying to find out how high things can go in this scenario, we're trying to get into this trade, obviously bullish, and you're trying to find out how high things can go. The 1618 level always has to be on the top. Okay. And if you want to find out how low things can go, then you would just reverse it. So you would put it the other way around. So there we go. That's it. So if you were to, let's say, if you were to try to measure this move right over here and figure out how low things can go, here's the 1618 level. Essentially, when this drop happened and you're trying to measure out if we drop again, so let's say we go to 420 and you're trying to measure out if we drop again, how low things can go, this is a cheat sheet for you. The 1618 is at the bottom. And I mean, really, this is not a coincidence. I'm not making this. You can't make these numbers up, really. The 1618 works all the times. So that's why I put it up the other way, because we're trying to find out how high things can go if you're trying to go bullish. If you want to measure how high, the 1618 has to go on the top. How low, the 1618 has to go on the bottom. All right. Now that we have that established, I like to, as Peter said, I like to look at the 15-minute chart a lot, and it's because you can get, you can really get a larger picture through. Hendrik says, mind blowing. Yeah, there you go. See, it's cool. Fibs are really cool. And realistically, I don't see why more people don't use it. I mean, it's available. Everybody knows it. These things bounce off of those levels all the times. So why not use it, right? Okay, cool. So this is a 15-minute chart. Now, it's hard to get these things, these ideas or these levels when you're trading only on the 5-minute chart or the 3-minute chart. Sometimes I like to look at the 15 for a clearer picture. So on the 15 today on the SPY, we can see that there's this inverse head and shoulders going on, okay? From the past couple of days. We gapped up the previous day, came back down, retested that head and shoulders, retested that neckline, and we were trying to break out, okay? Cool. We have all of that established and we failed it with this gap down. We can also see that there is a trend line going on over here. And so with this gap down, we failed that as well. Awesome. Now, this may not be so visible to anyone on a smaller time frame. So earlier in the morning room, Dan and I, we were talking about the failed inverse head and shoulders. And he's like, well, it looks like we're just retesting the inverse head and shoulders one more time, or that wing one more time. And I'm like, no, Dan, we're not. I think it looks like we're failing it. And this was early in the morning. And what made me so confident is the 15-minute chart, not even the 65, the 15, really, because you could really see that we tried to go higher and then we failed. We really failed it. So the 15-minute really gives you a good perspective on things. Another thing, I know we have very little time. I want to share everything I have with you. But another fun thing that I love telling people about is through my bear trades and through my bear career, I have found that majority of you guys that are not fans of day trading, or that are not comfortable with day trading as much, or timing wise it doesn't work. I like to find swing trades, but for a shorter time frame. So I don't like swing trades that last for more than a week. The longest swing trade I've probably been in has been about 3 days, really. And that comes from the 15-minute chart. So I take swing trades on the 15-minute chart. So if we, for example, we see this channel happening on the 15-minute chart. So I'll just set an alert on TradingView. Sorry, I am terrible with my art skills, but so you see this channel happening on the 15-minute chart. And you just set an alert over here and down at the bottom and say, hey, if this triggers, go bullish. Swing trade it. I mean, it could turn into a day trade, sure, but swing trade it. Put your stop down here. If you swing traded it and you didn't get out yesterday, then you would have gotten stopped out today, possibly. But there, we're back in this channel and you could do that. Another fun thing that I love that I found through just bear trading every single day, a lot of bear trading, is anytime, really, anytime we are in a, this is going to help you guys so much, and you're gonna come back and thank me for this finding someday. But anytime we have a bullish trend going, a bullish established trend on a larger time frame, so like an hourly or daily or 4 hours, 15 minutes might be too quick. But if you have long-term holds, and anytime we have a bull trend going and you find that we're above the 10 EMA and we have a bearish engulfing candle, maybe the next day or the day after, you buy puts. You buy puts 3 months or 6 months after. I mean, 3 months or 6 months out. Or you could buy puts, you know, I mean, a month out is the least I would do, because then you know, what if it just does sideways momentum? I don't want you to get chopped up. So for this example, this is a bullish trend going and we had a bearish engulfing candle. I mean, we gapped down and we had a bearish engulfing candle essentially. And then we kind of went back up. So in this scenario, I would have had my stops up a little bit higher, but if I had puts expiring 3 months out, I wouldn't have gotten chopped up in this scenario. I would have still been profitable exiting somewhere, maybe on this day, I don't know, or maybe on this day. I have no idea when I would exit, but here's a good example of you having to buy puts. Here's another good example of you having to buy puts. Anytime we are in a bull trend, so here could be a scenario where we have a bull trend established. This wouldn't count because it's not a bearish engulfing candle. This wouldn't count either, maybe on this day. Because it's not really a bearish engulfing candle, but it's gapping down below. So then you buy puts on this day. And I mean, on this day, you would have been profitable. I don't know if you choose to exit it there or not, or if you want to protect your positions. I don't know if you choose to exit it there or not, but this is how you protect yourself, guys. This is the best way to find reversals. This is how you know reversals are happening. So let's go back and look at it on the 1 hour chart. See if we can find any scenarios of, here's not a perfect example. I don't like this so much, but it's somewhat of an evening star reversal, so it could have worked. So if you wanted to swing trade puts, or if you wanted to, let's say, do a bear call spread over here. I know you guys talked to Tony and you guys talked about spreads. If you wanted to do a bear call spread just based on this bearish engulfing candle, you would have made money in about 2 days over here. I mean, that's easy money. Or you could do naked puts. But the VIX right now is so high that I would really just recommend doing spreads and capturing the premium rather than buying expensive puts, or naked puts for that matter. Here is, well, this wouldn't have qualified. This would have qualified, but you wouldn't have made that much money in here, and you would possibly gotten stopped out with this candle over here. So this scenario would not have worked with that bearish engulfing candle, but we can go find multiple. Here's another one. Bearish engulfing candle, you go look to short it. That's it. Or you could, well, you could short it with shares too. It doesn't really have to be with puts or whatever, but or do a bear call spread up over here. This is the hourly chart. So let's say, my friends, you wanted to swing trade it on a shorter time frame, and you wanted to do something easy. You know, you didn't want to be in a trade for too long because you don't know what the markets are going to do. This is how you are going to short it, and stick to the trend. Really, markets are extremely bearish right now, and it's really hard to go bullish. Every time the markets get bought up, we get sold off. I want to show you guys something really cool that I think when Hendrik and I talked, we were talking about. So here is the SPY. This was a new low that we made on SPY, okay? And this was pretty scary at that time, okay? But look at the volume that came in. All the shorts closed out, all the bulls bought in. That means there's buying interest still. The volume came right in on the 4th day, okay? And then it followed. We got the volume. Here's another scenario where we had a new low. The volume came right in and we followed. Here's another example of that volume happening, where we knew we had to hold this level. This double bottom had to be held. If it broke, we were going to take out this candle and we were going to go much, much lower. The very next day, the volume stood by. We got the volume every single time on crucial levels. On this day, we got the volume. Sure, there was reassurance, but look at this. We're not getting the follow through. Look at this volume. We made a new low. Nobody's wanting to buy. Nobody's interested. The shorts aren't even closing out their positions. Volume comes in when the shorts are closing out their position. So what happens is every one person that's been short since the beginning, give me 1 second, guys, just 1 second, okay?
Mens Miloni hun gør klar, så er det fuldstændig i tråd med det, Jakob og jeg talte om lige inden vi startede, lige præcis det der med, at der er ingen volumen har været her de sidste par dage, og det bare peger på, at vi nok skal længere ned. Så godt set, Jakob. Er der noget, vi skal have uddybet, noget I gerne vil have talt yderligere om? Nu kører Miloni som en Duracell-kanin, så vi er nødt til at sige til, hvis der er noget, I gerne vil have uddybet eller talt.
Sorry guys, that was me. Sorry, that was my babysitter calling and just wanted to make sure everything was okay with the kids, but okay. All right, awesome. So every time, so what happens is for every one person that's closing out. So let's say I've been shorting the market from here and I want to close out my short over here. I need to entice one more person, one more bull person with me to push it higher. So that's where you want to be a buyer, where there is that bull volume coming in, but you don't see that here. Do you? I mean, look at this. This is scary levels right now. And you see this decrease happening. And that to me says a bazillion things about the market right now. We are not in a safer time. Everything just gets sold off. And I'm not saying, oh, we're gonna go to zero. No, we're not. We're gonna find a bottom at some point. With the COVID lows, when we had COVID lows come in, it was a pretty quick drop. I was a trader by then. I mean, I was trading by then, obviously, and I was with RLT back then too. But look at the volume here. Look at these reversals happening. And look how quickly, it was a matter of 2 weeks and we had lots of volume come in, follow through happened, and off we went. That's it. No more lows came in and off we went. That's it. Here, what we're seeing is no one's closing out their positions and no one's buying. So that tells me we've got lots of room to go on the downside, just more weakness along the way. So if you are trading against the trend, you're going to hit your head against a bazillion short sellers, or a bazillion people that are going to say, oh my God, I got trapped. So let's imagine tomorrow if we have a bull day on SPY, let's say tomorrow we have a candle that closes somewhere around this level. What happens if you were a buyer in this range and you bag held through today and you sat through all of your emotions, every single emotion you had in your head, you sat through it and you said, nope, it's going to come back. Tomorrow, I guarantee you at least twice you will think, should I just sell and exit? Should I just get out for break even and look for a lower entry? Yes, you will. I promise you, you will. That's what happened on, let's look at Facebook. When these people bought thinking, oh, this is the bottom and we're going to get out and we're going to buy buy Facebook because it's so low and, you know, there's so much more range on it. And then we kind of came close. Look at that. Everybody sold. Very next day, everybody sold. We opened with a gap down. No surprise to me. This is no surprise whatsoever. Here, again, another scenario. When we have crazy bear markets like that, people are going to look to exit for whatever days they've bag held, they're going to get out for break even. On big gaps like Target today, when you have a day like this with a gap down like this, it is always best to not buy ever on a day like this and let it run its course. You have no idea how many people asked me if Netflix was buyable when it dropped. And I said, no, don't do it. Don't do it. Don't do it. And I don't know how many people actually bought and are still struggling with it. But imagine you bought yesterday and Target somehow manages to claw its way back up in about 6 months. What do you think the first thing you're going to do is you're going to close out. You're going to get out for break even. That's the first thing you're going to do. So it's just my advice. It's better not to trade bullish in a bear trend market right now. And so even on the fibs, let's go to ES. Ooh, we failed that gap, guys. We didn't. Whoa, that's not cool. Well, I'm glad I didn't go bullish then. Thank you for saving me an RLT Denmark. But okay, cool. So this is ES. And here, we're at the 1618 level, close to it. And let's say we get bought up. Everybody that bag held through this mess is just gonna say, I'm gonna close it out and I'm gonna get out. That's what moving averages are, by the way. You know, it took me a while to figure out what a moving average was technically, but if you're really thinking about it, it's the last 15 people that bought, or the last 10 people that bought before you or sold before you. That's what a moving average is. And so it just took me a while to understand something so simple as that. But if the last 10 people before you sold and are profitable, they're going to close out their position, sure, when these things reverse. So let's go over to the 1 minute chart so I can show you what I mean. Okay. All right. Okay, so this is my 10 SMA, and this is the 20 SMA. Okay, and so what we're going to do is make a bull scenario. So I want you to imagine 10 people standing in line, and there's a door in front of you. Okay, and no one knows what happens when that door opens. So one person goes through that door, and all you hear is screams. That's it. Nobody knows what happened. Everybody's just screaming. So then the second person goes in, and everyone's still screaming. Third person, fourth person, fifth person. You're the last person, the 10th person. Obviously, you know there's something scary behind that door. There's an animal that's eating everybody up, clearly, right? So that's why the last 10 people that sold. Now, if the first person that went in there was laughing uncontrollably because they found a pot of gold, the second person's going to walk in willingly, right? They're going to be like, yeah, I'm going to walk in through that door. So the first person that walked in short in this scenario was profitable. So the second person followed suit. the third person followed suit, the fourth person, fifth person, sixth person, seventh person, whatever, and they're profitable. Now, when this reversal happens, by the way, that's when the scary scenario kicks in, because now these guys are not as happy. Now the first person that walks through that door is not going to be profitable. So now you're hearing screams behind that door. And so that's why it's okay to go bullish if this reversal happens, if this moving average reversal happens. Just something simple as that. That's how it makes sense to me in my head. Again, doesn't have to be accurate, doesn't have to be right always, but if you are looking for a bull trading scenario, I would want a confirmation. First of all, I would want a fib confirmation, and I would want to see some sort of reversal on the moving averages on the 1 minute chart. If you're day trading this, obviously, if you're swing trading this, so I back tested this, guys, for the funded account, and so I could put a robot, you know, essentially triggers my entry as soon as this crossover happens, even when I'm sleeping. And so I had to back trade a couple of moving averages, a couple of different time frames, a couple of different, you know, scenarios and things. And I found that the 10 SMA and the 20 SMA was the best risk to reward with a very low drawdown. So you would get very little of the chop. So sure, you would get paper cuts over here, but you would get larger moves with the 10 and the 20 SMA versus the EMA or any other time frame. So I back traded this and I liked it a lot. And so that's why I've been using it. Feel free to back trade any other averages that you like and see if it works better in your case. But I would want some sort of confirmation. I would want to see some sort of reversal happen and then take that trade. And then look for that reversal, look for that bullish momentum happening. So I see this bull, you know, volume come in. I see that bulls are stepping in right now, but then we're getting sold off right away. We're not even letting the averages cross over. That tells me, hey, wait up. It's a little bit tricky still. Be a little bit cautious still. It's just something simple as that will save you a trade sometimes, or will keep you in and out of a trade, or in a trade a lot longer versus getting out at break even sometimes, or taking smaller targets. Here's another fun thing I wanted to show you guys on Tesla today. So let's see, we opened with a gap down, and wait, that's the 17th. I'm like, wait, sorry about that. Okay, so we opened with a gap down today on Tesla, and then we went higher. So then we were looking for that retracement, and then we were looking to go higher. I mean, that was the idea, right? So you were possibly thinking that. Now, let me show you how cool fibs are. Sorry, I don't know if you hear my daughter laughing in the background, but sorry about that. Let me show you how cool fibs are. Okay, so here's what, this is what we were looking to do, right? I mean, to an untrained eye, this would make sense. Type in a 1 if this is how you would want to trade it, because the S curve makes sense. We didn't make a lower low, and we're looking to make a higher high. All right, people typed in a couple of 1s. I see it. Awesome. But do you see this bearish engulfing candle on a bull trend? Rejection at the fib level? That tells me we're not going higher, friends. This moving averages crossover, we're definitely not going higher. So this is where the room was like, we're going bullish. And I'm like, nope, I'm not going bullish. We can't do it. Doesn't work, will not work. And I didn't go bearish either. I can't take credit for it. So I can't be like, I'm a hero and I went bearish. But I mean, how cool are fibs? You can't make these numbers up. And so this rejection, we didn't even make it to the 236. This rejection I knew would undoubtedly go to the 618. And then when we lost 618, that was scary level. That was like, yep, we're going lower. And there we go. Off we went. And so I did get a short end later on, which we talked about. But yeah, how cool are fibs? See, it saves you from taking a trade that you sometimes are not so sure of. Sometimes our eyes just can't see these things. I, by the way, can't see these things. So I still have to put fibs on them. Jeremy can. And so he will boss levelly go and say, okay, well, I'll short Tesla over here, and I will never understand why he does that. But it makes sense. To me, it makes sense now. It's the fibs. That's what it is. And that's it. Type in a 1 in the chat pane if your mind's blown. If you guys are following along, if this makes sense. All right, I see a couple of 1s. Yeah. See, so the idea is to see this level clear through, right? So we want to see this level clear through. We want to see the 236 clear through, and then maybe look for that bull move up. Then maybe say, okay, fine. All right, I am a believer. I do think that things can go higher, and sure, we can go higher. Now, today the market just kind of played along with it. Sometimes Tesla can chop around quite a bit. And on choppy days, guys, fibs are the bomb to trade, because I can go back and forth from 618 to 236 a couple of times on choppy days, just back and forth, back and forth, back and forth, a couple of times. Bull trade, bear trade, bull trade, bear trade. Just blindly set those up and trade those. If you put an entry at the 618 and you said, okay, well, I'm going to get out of the 236, and you put your stop at break even after maybe that candle came in and it scared you a little bit, you would have still been profitable. You would have gotten stopped out over here, but you would have still kind of sort of maybe looked for an exit. I don't know. You would have flipped back to the 1 minute chart, or maybe lost an R. I don't know. But if you just blindly put an entry at the 618 level, I mean, how cool is that? That could have worked. So there we go. I refuse to take bull trades right now in a bear market. So I will blindly set up bear trades, but I don't do blind bull trades. I need to see another factor. So like a trend line break, or the moving averages crossover with the fibs or something like that. So when two of my things coincide, so fibs and a trend line break coincide or something like that happens, then I'll take the trade. But otherwise, I don't take bull trades just blindly, if that makes sense, just off of the fibs.
Miloni, it's awesome and mind blowing. I think people are at a stage where we need to sit down and train a little with the fibs. So I see there's a few questions coming in on the chat. And maybe we should round off. I know you have an appointment in 30 minutes, and we also have a live stock review to do in a few minutes too.
Okay, so I see a question here from Simon. It says, so when you use fibs for the so when you use fibs for the upcoming day, you put fibs on yesterday's candle. Okay, yes. So Simon, what I'm doing really essentially on fibs is when I'm coming in the morning, right? When I'm coming in the morning and there was a tiny inside candle in Tesla, and this is where we opened at 7:45 on today's candle. I'm just trying to find how low we can go. So how much we can dip in relationship to this candle. So if 100 people bought I just want 61 people to sell. So is this the 618 level? Probably somewhere over here is where its 618 level is. So I'll put fibs on this candle and see if there's some sort of buying coming in at this candle 618 level. So let's just put fibs, and then we can go about from there. All right, so I'll put fibs on this way, and we're just trying to find out how low things can dip, right? So the 618 is at the bottom right over here. And so right over here, I see this guy, and I'm seeing not so much strength, maybe around on the 1 minute chart, or maybe around on the 3 minute chart. I don't see volume. I don't see high volume getting bought up. So then I'll just leave it alone. I'll just wait for a better setup to come in, especially if this level gets taken out. If the 786 gets taken out, I'm looking for a short now. What I'm doing is literally just waiting and watching, looking for a short. So what I'll do is set up an entry now blindly, because the 786 got taken out. Set up an entry over here at the 618. It will 100% retrace up again and then come back down. So set up an entry over here and then the 1618 level, which it is at right now. We might get some sort of buying come in right now. I don't know, but that's it. So now when we've established that, and obviously this move has happened, and now I'm trading on today's candle right around noon. The move is already usually done. So then around noon, I will move the fibs to today's candle and say, okay, well, how high can this go? If I'm trading, if I'm looking for a reversal play, then say, okay, well, if I want to take a bullish trade on Tesla, should I be putting fibs on this guy and see if the 786 gets hit again? And maybe that's a realistic target, or maybe the 618 gets hit again in reference to this candle. So you could switch it around. You could play around with it and switch it around and see how that goes. Yep, there we go. Thank you guys. If you guys have any questions, I'm in your Slack channel, so DM me and I'll post the videos that I have in your Slack channel too. And so yeah, and I will take it from there. I hope this was helpful.
Miloni, thank you very much. This was just great. So much info smacked directly into our faces right there. I know for myself that I'm going to check out those 15 minutes swing trades that you talked about. Also going to use the fibs far more than I have recently, because you're very right. They do mark out where the stock will change its direction. So thank you very much for taking the time to speak to the Danish crowd. Really appreciate it. And thank you for being in our Slack also, and being so willing to take our calls and have a talk to us whenever we have questions. And we know that you are the mama bear, so every time that there's a bear question, people kind of ask me, but they would rather ask you, I know. Yeah, thank you very much.
Absolutely, Peter. Thank you. I hope you guys have a wonderful day today, and we see some reversals come in today.
Right. All right.
All right. Bye, guys.